Let's get to today's action with our market panel. Bespoke co-founder Paul Hickey and Stifel chief equity strategist Barry Bannister. Guys, welcome. Barry, the 10-year Treasury yield eased up again today, back to levels down where they were late March. The S&P closed around 54.88. Now, all that said, I believe you still see what would be a violent correction for the S&P by end of summer, a 13% drop taking us to 4750. What's going to do that?
Well, we're looking for a mild case of stagflation. We're thinking the core PCE is actually going to arc back up a little bit, and the economy, the headline GDP at least, is going to slow down. You know, on this market, though, it takes about one generation to forget the danger in a bubble. The last bubble was 25 years ago. I was there. You have extreme optimism on a new technology. You have very narrow breadth, excessive valuation, day traders with strange names, political theater with zealous prosecutors. I mean, I almost miss nostalgia for Monica Lewinsky. And what do you have now? And then you had 78% declines, 78% in 2.5 years for the S&P 500, or for the NASDAQ. That was a disaster. So I would be very cautious here. And the summer looks like when we're going to get some of the news flow that we're expecting that's negative.
All right. Well, Monica Lewinsky's still around. You know, she's tweeting and whatnot. But Paul, it's hard for me to see the major indices falling apart without NVIDIA falling apart too, as long as it continues to impress. How does that happen? Especially because there's so many stocks, small caps in particular, that haven't been participating in what might look like a bubble. So do you think NVIDIA continues? How key is it to this market now?
So, I mean, just it's such a large stock at this point that it's got to continue doing well for the overall market. You know, the analogy to the late 1990s, you know, it's a very easy analogy to make given the new technologies and the run-ups that we've seen. But I would say if you want to make that analogy, you would probably have to say we're in early 98 at this point rather than in 2000. In early 98, that's when breadth was just starting to diverge. And in this period, breadth has really only started faltering in the last month or so. And then what we saw before that is things were continuing to do well. Take this for, you know, the 70% of industry groups are within 5% of a 52-week high. At the peak in March of 2000, the median level was 18%, even though we were at a record high. So back then it was tech and everybody else just falling apart. Right now it's tech and everybody else just, you know, treading water, so to speak, and trading sideways. NVIDIA is the big behemoth now. As you said, it's the biggest company in the world. And that growth rate, I mean, it's growing like crazy, but now, you know, you get 160 billion in revenues per year. Can you maintain that growth rate going forward? Is the world big enough to maintain, you know, to keep that growth rate going? And that's going to be a big question going forward. But for the rest of the market, besides NVIDIA and a handful of others, you know, things can continue. They're hanging in there and they're not falling apart like we've seen.